Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about why we bought Google stock. So I hope you guys all enjoy it. If you guys do, hit that like button, subscribe. And if you guys want to learn more about swing trading and trading in the market, how to find undervalued stocks, my strategies, my approach, check out our school. It's fantastic. Private live streams, quizzes, lectures, a group chat, but more importantly, actually teaching you to trade. It's not a get rich quick scheme. It's not alerts or anything like that. It's honest strategies that I've learned over the past 7 years. So check it out down below. And given that it's Valentine's Day, we'll do 50% off by using code Valentine's. Use code Valentine's to get 50% off. Only 5 spots for that code. So sign up, use it. I'll see you guys in there. And guys, let's jump into this. So this past week here, I've been MIA. This has been probably the first video you guys have seen from me in a while. It's because I've been very sick. So if I sound sick, I apologize. My wife and I, we've been literally just in bed sick for the past week. It's been rough. So I do apologize for that. So let's turn to the computer and see why we bought Google stock. All right. So when looking at Google's chart here, you guys will notice that we've seen a bunch of sell-off in a short amount of time. So the stock up here has gone from like $208 all the way to $187. So that 10% sell-off, you can look at it at two different approaches. You can look at it as, oh my gosh, this stock is sold off. I'm never going to touch it. It's never going to recover. Or you could look at it and go, okay, buy low, sell high. Right now could be represented as a low point in the stock. So this could be a good spot to start picking up some shares. Now, one of the things that I do is I look at indicators. So indicators are things like moving average lines, maybe even RSIs, MACD indicators, and even just basic support and resistance levels. So looking at this here, we'll notice this blue line. This blue line is what we call a 90-day moving average line. So pretty much what it acts as is trend indication. So you can look at it and just kind of instantly know the direction of the stock. So looking at this, we have that nice upward trend, right? Simple. Another thing that the 90-day moving average line acts as is support and resistance. Support is just where we get natural tendencies of getting buying pressure. Resistance is the complete opposite, so it's getting selling pressure. So in order for it to act as support, the stock has to be above the line. So looking at it here, you guys will see where the stock has sold off and hit that level. And then what happened? We had a nice move to the upside, right? Simple. Now, as we look back in the past, the stock hit that same level. Since the stock was below that point, it has a hard time to break up above it. And we had selling pressure. So now here, as we look at it and we go, okay, well, we have an upward trend, sold off down to that level. Does this represent a buy zone? I mean, the thing is at least for this approach here, I got in honestly at, now I wouldn't say the best of the best time. And the reason I say that is because normally what we look for is some sort of confirmation. So in order for there to be confirmation, we want to go to a lower time frame, like the hourly, 2-hourly, or even the 4-hourly chart. And what we want to look for is some sort of breakout. So you guys will see here kind of on the 2-hourly and even on the hourly here, we have just a hard time breaking above that same level, that same 90-day moving average line. So ideally, normally with like most of my trades, I will wait for that breakout above this level. Because like I said, it acts as support. It also acts as resistance. So we want to see that stock above that level. Okay. So why did we get in too early? Well, one of the main reasons I got in was because Google is a huge company. It's one of the most valuable companies in the entire world. It has hundreds of billions of dollars in cash. But more importantly, if the stock sells off, right? If that's just say we get more sell off from 180 down to 175, guess what? I am going to buy more shares. If the stock sells off from 186 to 175, our average cost, we could get our average cost down to about 178 in that range. So once it recovers, now we have more shares at a lower price for it to rebound. Now, we didn't go super heavy in on this position, but we took enough shares to say if this thing squeezes up to like $200, we could make, a couple $1,000s off it. So that's the thing. That's the trade. That's the approach I had. Honestly, if I was going to rate it, it probably would be a C plus trade. It's not the best. It's not the worst I've ever taken. But over this past week here, didn't want to trade, didn't want to do much. And honestly, we held this trade through the past couple of days, and it's been relatively performing okay because we're up, I think, about $40, $50 on it. So whatever, if it sells off, we'll see what happens. So guys, hope you guys all enjoyed it. If you guys did, hit that like button, subscribe. If you guys want to learn more about trading, check out our school. But I hope you guys enjoyed it. And don't forget, the broker I use, guys, is Moomoo. So I'll put a link to them down below where you guys can sign up. You guys can get up to 20 free stock just by signing up with them. So I hope you guys enjoyed it. Take care, everybody.